but numbers that were not bad, really at all, were numbers from Alphabet. That company coming in and beating on a number of different fronts. Just to run through some of the highlights quickly here. You see the sales ex traffic acquisition cost. That's basically payments made to partners, $61.9 billion. That's a 33% increase. For this company the size of Alphabet, to see a 33% increase in sales is relatively remarkable here. Ad sales, by the way, showing real strength. Those two up by 33%, and net income overall coming in ahead of estimates. You see there the various areas of the business and those various revenue breakdowns from the company. It looks like the cloud unit came in ahead of estimates as well. YouTube a little bit shy of estimates, but it was a gain of 25% in revenue for that. And then the company basically coming out on all of those fronts and beating, and also announcing a 20-for-1 stock split, or 20-to-1 stock split, I should say, Saz. So a lot to comb over in these Alphabet numbers.
Well, here's another big cap tech company after that Apple report last week, stepping up here and really sending a strong signal to the market. Hey, Mr. Market, we are okay. Our business is not only just doing well, in many cases, our business is accelerating. And here's a fun fact for you. I have to give our producer Val a shout out to this one. YouTube, $8.6 billion in sales, more than Netflix sales in the most recent quarter. Absolutely fascinating strength there over the past year and a half, 2 years for YouTube, as we all remain generally stuck at home because of the pandemic. Operating margins up 100 basis points year over year. That was good. And we were just talking about the disappointing ADP employment reporting. Who's hiring, Julie? It's Alphabet. 156,800 employees right now. It's up about 20,000 year over year. Just an absolute aggressive beast of a company that is hiring. Now, I could spend another 20 minutes looking at these earnings results, but Julie, I think one of the fascinating stories, too, is this 20-for-1 stock split. Here is a big tech company. We have not seen this in a while, I believe, since Tesla split its stock. I think sending a signal to the market also that we want more retail investors. We want those average investors that have come into the market the past year and a half, 2 years of the pandemic, to have a piece of our growth story. Now, I will remind folks that are new to investing out there, just because a company splits its stock and the stock price itself is cheaper, the company itself is not cheaper. It's just the stock price. But still, this is a very good quarter. And if you are interested in perhaps getting involved in Google here, now you have another compelling reason to do so with a cheaper stock price.
I mean, one thing we were talking about in our meeting this morning is people could have gotten into Google at whatever price they wanted because of fractional shares. But fractional shares just haven't caught on, even though, as we were talking about, you can buy a fraction of a Bitcoin, and most people do, who are sort of retail investors. They're not buying a whole Bitcoin. They buy a piece of a Bitcoin. It hasn't necessarily seemed to have caught on in the same way when it comes to equities. So that's one reason why this could be compelling. To your point, Ruth Porat, the CFO over at Alphabet, said flat out the reason for the split is to make the shares more accessible. And so that is definitely one of the stated goals here. To your point, splits have not been very common over the last couple of years. We had Tesla do it, as you said, we had Apple do it as well back in 2020, but only 2 companies did it in 2019. That compares with 47 companies in the S&P 500 that did it back in 2006 and 2007. So it's sort of fallen out of favor here. One other reason, perhaps, besides the stated one of accessibility that's been talked about a lot this morning, Saz, it could put Alphabet into the Dow, could make it eligible for the Dow, since the Dow is a price-weighted index versus the S&P 500, which is market cap weighted. There's some attention paid to not having stocks that are too pricey on an individual share basis in that index.
Can you just imagine, Julie, we are now at that point where Google might be added to the Dow. I mean, the Dow used to be this sleepy index, and now you have this potential tech beast potentially joining another growth company inside the Dow, and that's Salesforce. But really, just a very strong quarter by Google here. Now the pressure, I would say, Amazon. It's time for Amazon to step up here if they're not going to announce it this week. When? And split its own stock.
Yes, that is definitely now the next big question. One final brief note on Alphabet. Watch other companies that are dependent on ad revenue and those that are dependent on and perhaps vulnerable to Apple's shift in how it is favoring certain apps, right? Because this may be reassuring to those other companies. So if you look at a Facebook or Snap this morning, for example, we have been seeing increases in those stocks as we see this sort of halo effect. And we're going to hear from Facebook as well in terms of its earnings. So we'll see if we do get confirmation of that. Another company that's maybe having a little halo effect this morning is Advanced Micro Devices. 2021 record revenue for the company. The shares are up 11.5%. This is after fourth quarter net income beat estimates. Sales up 49% for the company. So another big company seeing big increases. And also gross margin is going to be about 51% this year. What's interesting is how much AMD has been gaining on Intel. So that 51% forecast for gross margin this year compares to a forecast of 51% to 53% for Intel. That's just one way that we have seen AMD gain on the company. It's been gaining in market share. The stock performance has been better, even though AMD's revenue is still a lot smaller than Intel, but it is gaining, Saz.
Yeah, I love how really over the past year, you've seen so many analysts, I think, try to poke holes in this AMD growth story. And again, they continue to have egg in their face. Look what AMD put up here in this quarter here. 6 straight years of operating of gross margin expansion. Check done for AMD. 6 straight quarters of 45% or more revenue growth. And now the company's coming out here and they're issuing guidance for revenue that was $100 million above most estimates for the first quarter. This is a growth company. Now, look, Deutsche Bank coming out here this morning saying they are getting a little bit concerned about valuation and the cost or inflation outlook for an AMD as it gets its chips, I believe, from a Taiwan semiconductor. But still, another strong quarter for AMD. And plus, keep in mind, we're probably nearing the time when that AMD deal for Xilinx will be closing. That is seen as another catalyst to this company.
Yeah, I want to, again, talk about this ripple effect here, because you have sort of the AMD-Intel rivalry on the one hand, but AMD, of course, is competing with a lot of other chip makers. And its stock going up today, rather than being seen perhaps as bad news for them, it actually seems to be giving a lift to some of the other chip makers. So if you take a look inside the Wi-Fi Interactive today and the movement that we're seeing in many of these stocks, here you have the gains here, and I've taken away the market cap weighting. These are equal weighting. But you see AMD in your upper left up 11% this morning. Xilinx, which it's in the process of acquiring and says that deal should close in the first quarter, is also up 11%. NVIDIA on the top, there's up 5%. Marvel, you can see up 3%. Qualcomm trading higher as well. It's about to report its numbers. Intel, in contrast, by the way, on the lower right, is down 1.8% or 1.1%, excuse me. But something else that we have to look at in context here as we look at all of these chip makers, look at this year-to-date performance. Taiwan Semi is the only of these stocks that is higher on the year-to-date. So when you look at AMD and the reaction in the chip complex that we're seeing today, it's the strength of the AMD numbers, and it's also relief about the AMD numbers, right, Saz? I mean, just because of how bad things have been.
This is another this is just continuing our thread on what we were just saying about Google, another large cap tech company stepping up here with a very strong quarter, and not just a quarter, because if they just came out here, AMD, with a very strong quarter, you would see the market say, well, that was the end of the year, we knew that, et cetera. But another tech company coming out with a strong growth outlook to the first quarter, saying growth was strong in the fourth quarter. It has continued momentum into the first quarter. And you know what, guys? It might just continue for the balance of the year. I heard nothing on that AMD earnings call last night with Dr. Lisa Su, the CEO of the company, that would suggest to me there is some form of major growth slowdown coming at this company over the next 12 months.
So I guess the real question going forward becomes, Saz, are those fundamentals going to be enough to continue to push the stock higher, or will it once again be overwhelmed by concerns over higher rates and the effects it's going to have on the multiples, which is going to grow more quickly, both in reality, but also in investors' perceptions? And I think that's going to be a really important question going forward.